What's up, crypto crew? Get ready for a Bitcoin Bulletin blast. We've got the Fed making moves, and you won't believe what's happening with Bitcoin as a result. Stay tuned. And the ETF flows are doing something wild, reversing after a period of massive inflows. We'll break down exactly why this is happening and what it means for your portfolio. But hold up, there's a giant golden statue of Donald Trump holding Bitcoin that just popped up in DC. We've got the inside scoop on this bizarre tribute and what it signals for crypto politics. Finally, we're pitting the original meme coin, Dogecoin, against the king, Bitcoin, for the ultimate 2026 pick. Which one will reign supreme? All that and more, right here on Bitcoin Bulletin. Don't forget to like, subscribe, and hit that notification bell. Fed rate cut sees Bitcoin above $117K as ETF flows cool and exchanges see spot selling. Bitcoin is surging past $117,000 following a recent Federal Reserve rate decision, but the excitement is tempered by a cooling of ETF inflows and notable spot selling activity on exchanges. This creates a complex picture for traders trying to navigate the market's immediate reaction to monetary policy shifts. Details are still emerging, but initial reports suggest that while the Fed's move might have initially boosted Bitcoin's price, the subsequent actions on exchanges and the behavior of ETF investors are painting a more cautious outlook. We're seeing a divergence between price action and underlying market sentiment, which could signal upcoming volatility. The interplay between institutional investment through ETFs and direct retail or exchange-based trading is crucial here. Analysts are closely watching whether this spot selling is a temporary correction or a sign of broader headwinds. The market is abuzz with speculation about the true impact of the Fed's decision on Bitcoin's trajectory, especially with significant outflows potentially on the horizon. Don't go anywhere, because the market's reaction to the Fed is even more complicated than it looks. And what happens when those ETF inflows completely reverse? Bitcoin ETF Inflows Reverse, as Fed's hawkish outlook triggers market caution. After a solid streak of nearly $3 billion in inflows over 7 days, spot Bitcoin ETFs experienced their first daily outflows, shedding $51.28 million. This reversal comes directly on the heels of the Federal Reserve's policy announcement, which signaled a more cautious approach to future interest rate cuts than the market had anticipated. The Federal Reserve did enact its expected 25 basis point rate cut, bringing the benchmark rate to a range of 4% to 4.25%. However, the central bank's updated projections, indicating only 2 more cuts in 2025 and fewer in 2026 than traders had priced in, shifted the market's sentiment. Fed Chair Jerome Powell's press conference, where he highlighted persistent inflation and downside employment risks, was interpreted as a hawkish cut, leading to a noticeable pullback in risk assets. Even Ethereum ETFs saw outflows for the second consecutive day. The cryptocurrency market reacted with a slight uptick in prices, with Bitcoin gaining around 0.3% and Ether rising 1.7% in the past 24 hours. The broader Bitcoin Bulletin 20, CD20, index also saw a modest increase of 2%. Despite the positive price movement, the shift in Fed sentiment has injected a dose of caution into the market, with investors now reevaluating their risk exposure. But the impact of Fed policy isn't the only story making waves. Get ready for something truly larger than life, literally, as a golden monument to a familiar political figure appears in Washington, D.C. All hail Trump! Crypto fans build 12-foot golden Trump Bitcoin statue in D.C. A colossal 12-foot golden statue of former U.S. President Donald Trump, prominently featuring a Bitcoin symbol, has been unveiled just outside the U.S. Capitol. This striking installation, funded by a group of crypto enthusiasts and memecoiners, has ignited significant buzz across social media and sparked discussions about the intersection of cryptocurrency and politics. The statue's appearance is part of a coordinated stunt by a livestream group aiming to celebrate President Trump's perceived pro-crypto stance. Positioned strategically on the National Mall, facing Capitol Hill, the statue serves as a bold statement from the crypto community. organizers expressed a desire for Trump himself to witness the tribute, highlighting his administration's past engagement with digital assets and the ongoing lobbying efforts by crypto industry giants to influence regulatory frameworks in the U.S. and abroad. This event is particularly noteworthy given the substantial financial backing Trump's campaigns have received from the crypto industry and his family's own investments. The Winklevoss Twins Digital Freedom Fund PAC, in partnership with World Liberty Financial Inc., explicitly aims to establish the U.S. as a global cryptocurrency capital. While critics voice concerns about potential conflicts of interest regarding regulatory oversight, crypto proponents are celebrating this symbolic gesture, anticipating potential favorable policies under a future Trump administration. Now that we've seen a monument to crypto's political embrace, it's time to talk about the future. Will the original meme coin take the crown, or will the digital gold standard prevail? Better pick for 2026, Dogecoin or Bitcoin? As 2026 approaches, a critical question arises for investors. Should you bet on the volatile, meme-driven Dogecoin or the established, store-of-value champion, Bitcoin? While Dogecoin delivered a stunning 250% gain in 2024, its current 2025 performance shows a 14% loss, and it remains significantly below its all-time high. Bitcoin, conversely, continues its march towards new highs, boasting a market capitalization of $2.3 trillion. Dogecoin, born from a joke in 2013, thrives on speculative hype, lacking tangible real-world use cases and struggling to attract organic demand, with only a few thousand businesses accepting it. Its value has historically been influenced by figures like Elon Musk, whose social media presence has fueled massive rallies, most notably leading to its 2021 peak. However, without concrete value creation, Dogecoin has experienced sharp declines, trading sideways for extended periods. A recent resurgence was partly linked to a playful nod to the DOGE acronym by Donald Trump's administration, but this proved temporary without sustainable catalysts. Bitcoin, while also speculative, is increasingly viewed as a digital store of value, akin to gold. Its decentralized nature, capped supply of 21 million coins, and crucial SEC approval of spot ETFs have made it far more accessible and appealing to institutional investors and financial advisors. Unlike Dogecoin's infinite supply, Bitcoin's scarcity is a key differentiator. Ambitious price targets from industry leaders like Cathie Wood and Michael Saylor highlight the long-term bullish outlook, driven by the expectation of continued institutional adoption. The stark contrast in fundamentals, Dogecoin's speculative nature versus Bitcoin's store-of-value narrative and institutional backing, suggests that while both are volatile, Bitcoin presents a more compelling case for long-term investment in 2026 and beyond. Dogecoin's inherent volatility and lack of clear catalysts make it a riskier proposition compared to Bitcoin's steady ascent and growing acceptance. That's all the breaking news you need to know for today. But before you go, let's do a lightning-fast recap of today's top stories. And that wraps up another explosive Bitcoin bulletin. We saw Bitcoin surge past $117K despite mixed ETF signals after the Fed's cautious rate decision. A giant golden Trump statue appeared in D.C., sparking political crypto buzz. And we debated whether Dogecoin or Bitcoin is the better bet for 2026, with Bitcoin's fundamentals shining through. Thanks for tuning in. If you got value from this video, smash that like button, subscribe to Bitcoin Bulletin for more daily crypto insights, and ring that notification bell so you never miss an update. Follow us on all our social channels for real-time news and discussions. We'll see you in the next one.